things that they pay for, anyone pays for, they value. Welcome. I got a great message today to share with you, something that I learned early in my career. Didn't implement as hard as I should have. Went back to it much later in my career. So hopefully you'll learn from my mistakes here. Implement this soon if you haven't already. Remember to like and subscribe to our channels here. We'd love to share this content. We're always producing new tips. Each week we're coming out with new videos. So please like and subscribe to get more of this. Now, what we're talking about today is fees versus commissions. And one of the things that my mentor early, Jeff, taught me was that if I wasn't going to value my time, how did my clients value my time? All right. And this was, 02, 04 in that time. AUM was starting to really become a thing, planning. To that point, people were taking upfront commissions, really kind of a sales-based role. And so there's this whole change going on in the industry. And that's still a competing conflict today. We know DOL a couple of years ago, we had all these new regulations and things coming out. Industry is ever changing. And so really understanding how you're compensated and how you need to be compensated to make the money you want to make each year. You have a goal each year, you have an amount each year that you want to make. There's no way to get there unless you have a plan to do so. And I hope this helps bring a little clarity to that. So fees versus commissions, all right? How will you be compensated? Let me just quickly review fees. Are you charging an hourly rate, planning fee? Is it one-time annual? You can get pretty creative. I saw, a little extra tip here. I've seen where people open brokerage accounts. Monthly will fund it with ACH, and then one time a year will pay out for the plan. So it makes it a little easier for the clients, and compliance doesn't have a problem with it, like where you're charging someone a subscription or charging a credit card. So little tip there. If you're, again, all this is based on compliance and licensing. Do you have a consistent way to calculate? Consistency is very important because if you want to become a referable advisor, you need consistency. You can't have someone refer you and say, oh, he charged me this, and then someone else walks in and you're charging something else. You have a different way of calculating it. You need to be able to repeat your processes. Are you committed to fees? Another big one, all right? When you say you're going to charge someone, do you actually get in front of them? Are you willing to do it? Or are you too worried about making a sale and offending them that you're going to lose out on both? And will you be only fee-based? Commissions, what products, what carriers will you work with? What are the commission structures? How do you maximize those contracts? Are there grid rates, production requirements? Is there amounts you have to reach to get benefits, right, with some of these career contracts? Lots of things to consider there. Or are you going to be a hybrid, right? Again, all based on licensing. Are you going to charge fees and take commissions? How are you going to disclose that to your clients? How will you be compensated fairly in that method? Now, an important thing here is your hourly rate. And it's not that you're necessarily going to charge an hourly rate, bill them or whatever it be. You could. But you got to understand what you're worth or what you need to make an hour. Just like an attorney would have billable hours similar to you based on the products you're working with. You can take this case by case and have a consistent way of judging who you're working with and how you're charging them. If you have an income goal and you are not making a certain amount per hour, there's no way you're going to reach that. Whether you're doing a hybrid model, a fee-based, or commission only, you have to be able to calculate that and figure it out. So I've worked through a little example here. So we got how much should I charge? How many weeks in a year? Say there's 52 weeks. You want to take off 2 weeks a year. So that means you're working 50 weeks, right? But you're going to work 40 hours a week. So if we do the math, 52 minus 2 is 50. Times 40 hours, that's 2,000 hours a year that you're working, okay? And you're going to plug your own numbers in here, okay? Next, how much do you want to make a year? Is it $100,000, $200,000, $1 million? Whatever that number is, right? And you need to be realistic, but plug that number in there. So what's your hourly rate? Very simple. 100,000 divided by 2,000, I need to charge $50 an hour, right? Now, when you break it down like that, it doesn't seem like a lot of money. It's very obtainable. Daily, that's $400. I need to sell a life policy worth $400 a day. You sell one every 2 days worth $800, right? You can start to break down the math. And this is how you can start to work towards your income goals that you have. All right? So I hope that helps. Now, plan fees, this is the next step in this, right? Again, you have an hourly rate. This gives you a base idea of what you need to make a day. This should dictate, and there's other ways and other tips I've shared in the past and will continue to share on how to measure. But each day when you're at your desk, I used to have a workbook right next to me, and each day I'd track my activities and my income towards my goal. And I would know that today, this week, this month, the numbers I had to hit, whether it was on track or not. I'd sit in that chair and get my activities done or get what I need to get done to get to those points before I left it. So whatever works for you, and that's why we're always sharing these tips and new ideas. But when it comes to plan fees, so it works a little bit differently, right? So hours needed times the hourly fee. So you're going to be able to tell about how much time you put into writing a plan, financial plan. Does it take you 12 hours? What's your hourly rate? 50 or is it 250, depending on how much you need to make. So your planning fee is about $3,000, right? In this case, 12 hours times $250, $3,000. All right. There's another way to do it. You can do a percentage of net worth or balances. So if someone has $1 million, charge 5%, 5,000 planning fee. There's all different ways to do it. Or a planning fee calculator. All right, calculations that take into account number of kids that you're planning for college. They're a business owner, have a business you have to do some planning for. Do they own additional real estate outside of their primary residence, rental properties? Their net worth calculations. You take your hourly rate into consideration there as well as their assets. So again, very important to understand that, build that fee calculator. We'll share that in a future tip. We've done some work around that as well for our advisors. And then the frequency of billing. Again, monthly, annually, however often you charge your clients. Now, this is a compliance issue or a broker-dealer issue, how often they allow you to do that based on the planning fee agreement. But I've seen some unique things. Again, the ability to put it in a brokerage account monthly, charging, with ACH, and charge it to that so your clients know how that works. A lot of different ways you can do it. Compliance is becoming a little bit less strict there. So just be careful on how you do it. But again, if you know what you're worth, if you know what you have to make to get to your goal, you're much more likely to hit it. And your clients are going to value your time, okay? Things that they pay for, anyone pays for, they value. Things that are a little more expensive, you value. Your car, you take a little bit better care of than your jeans. All right, so this is all just human psychology, how it works. And I hope this helps. All right, so again, please like, subscribe. We'll be sharing more tips with you, and we'll see you next time.